Hey, how's it going, everybody? Michael Lamar here from Wall Street I.O., the #1 backtesting software for swing traders, with a quick update for you. Check out this Apple stock. I want to highlight for you something called a broadening pattern. That's when your support and resistance actually becomes wider and wider. So right now, here's the support way down here that I just drew. Across the top, you see that it's actually at a higher slope. This creates broadening, which often leads to longer distances between support and resistance. Now, one of the things that I've been noticing since the VIX has been so high is that Apple's payday cycles have been lasting longer than normal, and this is both to the upside and the downside. So something to kind of take note of, right? Now, in last week's video, I gave you a few really important tips that I want to cover for you again. The first one was when we covered Apple last Sunday, a week ago, I said that Apple was at the top of its channel, and I kind of asked everybody, what do you think? Safer or riskier to buy Apple at the top of the channel? Well, again, generally, it's riskier to buy any stock at the top of the channel. Now, second thing I said is I highlighted 177.5 probably about a half a dozen times, and I said, hey, look, if Apple cracks 177.5, it's very likely to drop and potentially drop quickly. It's also got a bearish seasonality coming up in April. When we look at Apple over the last 5 years, April is usually a soft down month in the stock. Here's April again for you right now. So it looks like we did end up getting that bearish payday cycle. Right now we're still making lower lows and lower highs every single day. I do think that ultimate support here is closer to the bottom of the channel, around 153 to 155. However, we do have another base between 160 and 162. So my metric system for tracking bearish payday cycles like this, as far as a good way to know if the momentum is increasing or if it's likely we're going to get a reversal, is looking at a few things. For bearish cycles, I look to see if it's making a new daily low today. The second thing is it making a lower daily high? And if you think about that for a second, you have a stock that's making a new daily low and a lower daily high. Generally, that means the momentum is moving down. The third one is if it closes at a new daily low, then you know that the momentum is still moving down. Okay, so I just kind of want to highlight that for a moment. Now, I want to jump over to Facebook because we've had a lot of chat about Facebook, especially in the community. In fact, when I jump over to the community right now and just kind of highlight a couple posts that I made, I actually highlighted Facebook earlier in the week. You can see 4 days ago. And what I did was I highlighted the stock's mega support areas. In Facebook, we've been doing a strategy called the contrarian strategy, which is basically to buy the stock after it's gone down 4 or 5 days in a row. That strategy has basically worked 26 times in a row. It's been incredibly profitable for a lot of us. However, earlier this week in the community, I said, hey, look, it looks like this strategy is going to fire. Should we be a little bit more cautious this time around, or do you think it's going to work again? A lot of people said, hey, let's be a little bit more cautious. And part of that reason is because the stocks move down had a lot of velocity. Sometimes it's not always the stock going from one price to another. It's how fast it moves to that area, which is called velocity. And this move down had a lot of velocity. There's a lot of negative press around it. So I highlighted 3 areas of possible support. Again, this is as the stock was way up here, still breaking down. Support 1 being just below 170. It broke through that right away. Support 2 being 162. It broke through that area as well on Friday. The big support for Facebook is down here closer to 150 to 155. So again, using the same metric system as I showed you for Apple, if we keep hitting new daily lows and keep closing at new daily lows, then we're probably coming down into the support area. I can say that a bounce, as soon as we fail to make new daily lows or form a reversal candle, is very likely and potentially could be very aggressive. It could be a really big bounce. However, after that bounce, I'd still be a little bit nervous. This could take a while to unravel and could potentially send this stock into a long-term rounded bottom and have it fill out this bigger area down in here in the lower part of the channel. So I just kind of want to highlight that for everybody real quick. Again, it's very likely we could get a bounce soon. You'll know that it's coming because we'll form a reversal candle or we'll fail to close at new daily lows, but after the bounce, I would be a little bit nervous about the stock. Okay, so again, I hope you're trading well, and I hope you took my advice last week for Apple and you got out at 177.5, and you should be good to go. So keep an eye for a bounce hopefully this week. This is Michael Lamar, and I'll see you on the inside.